when it comes to managing your money. If you think all you need to do is hire an advisor and place everything in their hands, my next guest says think again. He says financial advisors often do things behind the scenes that cost you big bucks. But it doesn't have to be that way. Ed Butowsky is the managing partner at Chapwood Investments. He joins us now to talk about the dirty little secrets financial advisors don't want you to know about. So I love this segment. Let's start with number one, get right into it. And that is markups on bonds. What they charge you for bonds, way too much. Tell us about that.
Well, oftentimes, and again, none of this stuff is illegal, but it adds up, and the client has the power and the right to ask and bring this out as a discussion point. So first and foremost, when a client is buying a bond, an advisor charges a markup, and when they sell them, there's a markdown. You have the right to negotiate that amount, and you must know that it's not across the board always the same. You should literally ask your advisor ahead of time, how much are you going to make on this? It's not a commission, it's a markup or a markdown. An advisor should not charge more than 25% of 1%. In our terms, 25 basis points. A quarter of 1%. That's it.
Awesome. Okay, let's talk about management fees for investing in money market funds. Now, I am making nothing on my money market fund right now. I mean, it's tiny. So why don't you like fees on these money market funds?
Well, this is the point, and this to me is absolutely borderline criminal, because you have people who have money in money market. It could be in a managed account, anywhere in an account that you have money market, and you have an advisor charging you a management fee, and in some cases it might be 1%. You're certainly making less than 1%, aren't you, Jerry? All right?
Oh, yeah.
If you're being
you betcha. I can't find any savings vehicle that's paying right now.
But if you're being charged 1%, the difference is what you are losing as a client. So right now, money market's paying substantially less than that 1%. What do? Call up your advisor, say, stop charging me on money market. You have the right to do it, and you should do it.
And it makes you sound smart, and the guy's going to have more respect, or woman is going to have more respect for you. Let's talk about management fees for legacy funds. So let's say you go to a new advisor, you bring in a lot of funds with you, and suddenly they're charging you for those, but you brought that with you.
Well, it's not just that. So going back to the management fees, if you bring in, let's say you inherited some stock or you've owned a stock for a long time and you put it in an account, an advisor should not charge on that. An advisor is not doing anything. Quite frankly, Jerry, most advisors shouldn't charge on any bonds. You're not really managing bonds. You buy them. In a lot of cases, they just sit there. But advisors find a way to charge on those bonds. And again, the client has the right, and quite frankly, they should call up and say, do not charge on money market, don't charge on any legacy equity stock positions, and do not charge on my bonds. Advisors aren't going to like this, but they should do it.
I like the way you think, Ed.
Yeah.
Let's talk about favoring mutual funds over ETFs. We know ETFs are cheaper. I'm thinking maybe these fellas make more money on the mutual funds.
You got it, Jerry. And everybody should, in the first quarter, call up their advisors if they own mutual funds and say, is there an ETF, an exchange-traded fund, that allows me the same exposures that are cheaper? And there's a website, and in fact, if it's okay, I'll mention the website that people can go look at. It's personalfund.com, and I have no relationship to it, but people should go, put in their mutual fund, and it will list the ETF equivalent. You should ask your advisor, why am I not in it? They might find out that their advisor makes a little bit more money on that mutual fund than they do the ETF.
No shame with these people. All right, let's talk about overcharging for stock transactions. What should I be paying to buy stocks through my broker or through my advisor?
Right. Hey, look, Jerry, the game has changed. I've been at this business for 20-plus years. We used to make a lot of our money off of commissions. That's not the case anymore. Prices have come down. Most people should not pay more than $10 a transaction, and never should they pay more than $50. I don't care how much money is involved. It's a negotiated thing. You should ask your advisor, how much are you going to charge me before they do it, and tell them, I don't want you to pay, I don't want to be charged more than $50. That simple.
All right. Well, you know, I think if your advisor says, I don't want to do any of this, then you move. You got to go somewhere else. These are great ideas, though, Ed. Thanks for the time today. Great information.